All right, guys, we're going to talk about some really cool stuff today, including how Alex is bringing on these meme coins and how come they're taking off on Robinhood Chain, and the way that Maxfi creates the liquidity for these chains is actually changing how meme coins are set up, and it's absolutely changing things. Plus, there's literally bonds now on Maxfi because ESGOV, which is basically a T-bill, you can now LP it and earn on it more than it even pays. So T-bill pays like 3%. These bonds can pay 20 to 40% in an LP. It's crazy. Alex is a mad genius here. I call him the genius dev, but he's no longer a genius dev. He's a mad genius now because the stuff he's doing is now insane. It was very funny in the comments. Alex from Blockchain Pills is a number one YouTuber for the ICP community, which is a cryptocurrency. He said that it wasn't in his bingo cards today to LP T-bills. And I find that to be hysterical. So we're going to talk about that. We're going to talk a little bit about the tokenized stocks, how they're doing. And we're going to also talk about what is going on. $16,311 every day is being handed back to the Maxfi community in DEX fees. These are fees that people are earning on Uniswap, Aerodrome, PancakeSwap, on Base, Arbitrum, and Robinhood. Mainly Robinhood, which we now basically we control. We are Robinhood now at this point. Maxfi is basically the number one LP manager in Robinhood, and we're keep growing. So this is incredible. $500,000 paid out, and we just want to thank the community. And you guys are so hyped. The stocks that we have on there, I mean, we can't believe how great the stocks are doing. But I want you all to understand, this is just the start. What Alex is doing in the background and stuff he's releasing, I really do believe, and a lot of other people now believe, now they see that not only has Maxfi brought DeFi back, but we are about to change finance. And our TVL, what is our TVL right now? Do you have the TVL?
I think.
Oh, there you go. So it's just keeps going up every day. It doesn't stop. And it doesn't stop because people understand that this is the most efficient, capital efficient system for LP farming, number one. Number two, they're making money. They're telling their friends, they're telling their family, they're telling other people. You have some institutions you're meeting with actually very shortly. Institutions are already there. There are more coming in.
They're flying
in. Literally, people are flying in to meet with Alex. And I don't think people understand how early you are. The reason people are doing great is because what Alex has created here is absolutely revolutionary. And I'm happy and I'm proud to be working with you, man. Thank you.
Thanks, Aaron. I really appreciate it. The fact that we're at $5.17 million in TVL is incredible in about 5 months.
Yeah.
And I've never seen a project grow that fast in the 6 years I've been in DeFi.
In a bear market.
And this is a bear market. And this isn't like a token market cap, which can inflate very quickly. This is TVL. These are real dollars in USDC and Bitcoin and ETH in stocks. I mean, you name it. So this is real money, and we're paying out over, like you said, $16,000 a day now to our users every single day, and it just keeps picking up speed. On Robinhood Chain alone, which is growing like gangbusters. I mean, look at all the money flowing on a Robinhood Chain. We are the 9th largest protocol currently, and the largest liquidity manager on chain.
We are the liquidity manager on chain there. Like, I don't know if anyone else is. I mean, there is no competition. That's it. We dominate it.
Yeah, so we're bigger than Curve, Ramses, Sushi Swap, Symbiosis, and even PancakeSwap.
Crazy.
I'm sure they'll eventually ramp things up. Like PancakeSwap obviously is one of the biggest dexes in the world, but we're so early, and we're building out a lot of the infrastructure on the chain itself that allows these markets to function. And because of that, we are seeing outsized returns. Our users are getting higher yields, better results than anything that they could really do anywhere else at the moment. And also because, like you said, the capital efficiency of the Snuggle rebalancing technology outperforms manually trying to manage these positions on the blockchain, on the DEXs, the old-fashioned way, or using older traditional rebalancing technology, which is extremely capital inefficient and often obliterates a position's principal over time very quickly. Whereas on Snuggle, you preserve your principal and you reduce realized and permanent loss more so than you could anywhere else. Also, all the hidden costs that we talk about all the time. Since we don't swap, we don't pay any swap fees, we don't pay any slippage, no price impact, no MEV extraction, and then we drastically reduce realized and permanent loss across rebalances by 40 or 50% because we use Snuggle rebalancing instead of traditional hard 50-50 massive swap rebalancing, which is extremely inefficient and damaging to the principle of a position over time. So our users, and because of that, our TVL not only preserves itself, but it grows.
Well, that's something important that you just said. Our TVL preserves itself and grows. Whatever people put in, it's growing, versus in a traditional system, you'll notice over time, they kind of waver down or go lower. I'm not seeing that here. Even on days we don't have much inflows, we don't go down. And the reason we don't go down is your wealth is being preserved because of the way the system is built to stop impermanent loss with the time delay, with everything that Alex has built in. But I wanted to ask you one question. Meme coins. You put in the chat with me, and we were actually in a chat with someone else, and you put in there, I think I figured out these meme coins. And can you explain what you're doing on your meme coins as far as the ranges go? Because you're doing something that is counterintuitive, which a lot of times you do, but it's working. And then when you explained, so a lot of people are going into meme coins and you're going like 10%, 20%. You're going wider and you're cleaning up even more. Can you explain why you're cleaning up and how people should take advantage of these meme coin pools?
Absolutely. So as you know, I've been teaching advanced concentrated liquidity concepts for 5-6 years now.
Okay.
And I have been through plenty of meme coin crazes. And I coached Rory from the UIG. He was one of our fast track members, where he made over $1 million liquidity farming Fartcoin. Okay.
Wow. Okay.
And that's a story, that he's a legend at this point.
Got it.
He started with like $100,000, turned it into over $1 million in like a year, and then took his profits, put it into Bitcoin. Brilliant. One of the things he did that really helped was he went super wide ranges. And
when you say super wide, what are we looking at? Is it like this one 300%? Is that what we're talking?
Yes. So it depends on the token itself.
Okay.
But you can look at a chart and get an idea of the volatility of a token, and also what phase that token is in. Is it in its initial pump and dump? Is it past the pump and dump? Is it oscillating widely? These are all things you can use to consider your range width. Do you think the token's going to run? Is this a newer token that might go on a run? If so, a wide range helps you capture a lot of that movement without having to rebalance. Now, these meme coins are so wild that even on this 300% wide range here that I have, I started right in the middle, and it's gone up quite a bit, and it might leave my range if this token keeps going on a run. Meme coins, they'll do 5, 10, 20x.
Right.
And you'll be quickly out of range, like on my, let's see, Wolf. Everybody's talking about Wolf right now in the community. Wolf's just been on a tear. This thing, even with 122% wide range and I have a 36-hour rebalance delay on here. This thing ran all the way out, and it is still pumping. And I have a very wide range, in a long rebalance delay, so I don't necessarily chase it. I'm waiting for it to retract back into my wide range.
Right. But it's more than just the range. What Alex was explaining to me, and maybe you can explain it differently or more detail, is the reason the wide ranges are working is because in these meme coins, what happens is, let's say you have a 200% range, everyone is clustered at 50% or less, trying to get that high APR. They get blown out the water. You're the only one sitting there, and you're earning for a longer period of time. So basically, both those mechanics are coming into play. I can't say on every single meme coin, but a lot of the meme coins you're doing, you're going wide range and you're out earning people who are going in too close. Is that what you're seeing? Got it.
So there are two big factors there that you mentioned.
Okay.
First is a higher time in range in general. So I have this wider range. This thing has been in range the entire 2 days this position has been open. It's got 171% range. This one's got a 300% range on the same token. These have been in range 100% of the time, earning the entire time. If I had a 20% wide range,
you'd be out.
I'd be out of range already. I'd only spend probably 10% of the time in range. When I am in range, it would earn massive fees. But is that optimal? Probably not. So you can find that sweet spot between range width and time in range. Now, on a blue chip or an altcoin, like that sweet spot's usually somewhere a lot tighter than this.
Got it.
But on a meme coin with extreme volatility, a very, very wide range gives you a lot more time in range. It still goes out. It can still go out of range, even with, like I showed you, like my Wishbone, 122% wide range. It's finally started running and it's gone out of this range. Now I'm not earning right now, so my earning rate is going down. Whereas with my Lil Uni position, it's just constantly earning. The second big factor that you mentioned is competition in the pool. In range liquidity competition in the pool, other liquidity providers are fighting for these juicy fees that we're earning. This is a 1% fee to your pool.
Right.
We earn 1% every time someone swaps in this pool. Now, if there is $50,000 of TVL in this pool, and just to keep the numbers easy, let's say I have $1,000 of that TVL and it's mine. Now, let's say we all start at the same point in range. Well, now it's $50,000 in the aggregate competing for the fees generated on the volume trading through our liquidity. Now, what happens if the price starts running and Lil Uni here is no longer in the middle of the range, but let's say it's moved up 80% or so, and I'm still in range, but let's say everybody else was running a 20% or a 50% wide range. They're now out of range. Now the effective competition in the pool, let's say $49,000 of liquidity is out of range. Now I have $1,000. I have 100% of the ownership of the pool, and I get 100% of the fees that the volume on this pool generates. I am the only one still actively in range providing liquidity. So with a super wide range like this, let's say everybody else gets cut out of range right here. At that point, my earning rate shoots through the roof.
Yeah.
Because I'm not competing with anybody anymore, or very few people. And then let's say they have a rebalance delay. They're just waiting. They're waiting to kind of chase it up. Or if they're doing this manually, they might be looking at that out of range, just be like, I'm not touching it. I don't want to rebalance. I'm scared. Because it costs too much to rebalance sometimes.
1%.
Yeah, especially if they're doing it the old-fashioned way. It's like that. And then what happens if you rebalance and the price just moves back down, and now you've taken massive and permanent loss?
Well, this is the problem with liquidity farming. A lot of people avoid it, and why we're so competitive. And I used to liquidity farm meme coins for a minute, and I stopped because with $5,000 every time you'd have to do a swap back in with about $2,500 to rebalance, let's say, even $2,000. Well, I would lose $20, and then like I'd look at the meme coin again 20 minutes or 30 minutes later, I would be out of range. And I'm like, wait a minute, I just spent 20, it's actually more than $20 because you're also paying all the MEV bots and price impact. I lost like $25, $30 most of the time. So then I go do another one. Well, now I'm out $50. So now I'm hoping I make back the $50, and then I'm like, well, I don't, because these things move around. So you can't even get too tight, whether you do it manual or traditional rebalancing, because the fees will just start eating you alive. And that
And
is,
on these low liquidity meme coins, not only the swap fee, but they have massive slippage and price
oh yeah.
impact, and the mev bots eat them alive. So you're not just paying that 1%, you're paying probably closer to, in some cases, 2, 3, 4%.
I've been in tokens like this on Aerodrome 2 years ago that absolutely destroyed me. I lost like $2,500 in there, and I was trying to. It was obviously before Maxfi, and there was no way I could catch up to it. The fees were good when I was in it, but staying in range was near impossible. And every time I swapped in and out, I must have literally paid Aerodrome $300 to $400. And you know how much I made on the pool? Maybe like $200.
Yep.
Like, I didn't even make that much money, because I was always trying to capture this in range part. It never worked. It was impossible.
So that's why I always go super wide on
Yeah.
meme coins. I basically, I look at the recent volatility. I also kind of forecast if I think the token's going to run or dump or something, and I widen my range to capture a lot of that. And then I let the Snuggle rebalancing technology
Just handle it.
efficiently keep me near the earning range. And one thing to keep in mind, the rebalance delay can protect you big time, because
Yeah.
a lot of these tokens will just spike up for like 6 hours or a day or
Come back
less
down.
and
Yeah.
come right back down. And zero rebalances, you're back earning. You've lost zero to impermanent loss, and you're back earning these crazy fees.
Well, what I want to also talk about, what you just touched on, is the way that Maxfi, when we enter into a pool, which is really interesting, especially on these meme coins and even some of the stocks, but mainly the meme coins. The way I started to understand it from what you're telling me and Alex talk all the time, so I'm learning from him. But what he's telling me is that, for example, and you correct me if I'm wrong, but when we start creating, when you launch a pool on Maxfi, you tell the community, we come in, we're in the middle. We start, everyone kind of starts in the middle. Then when we go out of range, the way we snuggle up to the range, we kind of provide a cushion for that particular meme coin. So normally, if people are rebalancing themselves or they're using traditional systems, it would go 50-50. So let's say 50-50 is a 20% range, 10% up, 10% down. So you'd bust right through it. Instead, what happens with Maxfi, when Maxfi gets involved, there's a 20% cushion below you. Correct? Am I correct on this? There's like a cushion that helps it, so then it. Yeah, go ahead. I hope I got it correct.
So Maxfi and Snuggle, with the Snuggle rebalancing technology, in aggregate, collectively, I've noticed a very strange effect we have on these meme coins on Robinhood Chain, and effectively on every token we provide liquidity on. But it's so prevalent here, so noticeable, because the liquidity is lower. These are newer tokens. They have lower circulating supplies, so the prices can move quickly. And what I've noticed is when we release a new meme coin pool on Maxfi and a bunch of people start providing liquidity on it using the Snuggle rebalancing tech, what happens is, like you said, we provide a cushion of liquidity. So it's like a ratchet, and it has a ratcheting effect or a flywheel effect. So let's say everybody starts providing liquidity right in here, and the liquidity gets deep and concentrated right in this trading zone. So it's harder for the price to move quickly through the trading zone, because we've provided deeper liquidity. It takes more buy pressure for it to go up, more sell pressure for it to go down. But let's say the buy pressure is great. The meme coin's popular. It's taking off. And there's a self-reinforcing effect with us listing a token. People start buying it.
Right.
People start talking, sharing it on X. Hey, Maxfi is listed this token. Oh, this is big news. So, okay, a bunch of other people start buying this token, thinking it might go up. And we've deepened the liquidity. So the price kind of starts stabilizing. But then let's say everybody's running super wide ranges. let's say it breaks through everybody's ranges. It starts breaking through these liquidity ranges. And now there is not as much liquidity for it to have to buy through to move the price up as much. So now the liquidity is lower in these regions outside of our concentrated liquidity. So less buy pressure causes the price to move up quicker. So, okay, it breaks out of our range and it legs up like Wolf did. Wolf now is on a run and it is just like clear skies. There's no friction. Now it goes up. We all have rebalance delays on strategically. Could this be artificial? Could this be temporary? Is it just going to retrace? Let's wait a little bit. Well, Maxfi users, Snuggle users with the Snuggle Rebalance tech, let's say, okay, 8 hours has gone by, 12 hours has gone by. We snuggle up to the price, let's say like right here. The price comes down, comes back into the range. All of a sudden, all of our deep liquidity has now shifted up. So it's then the price, let's say, just naturally falls back down into our collective cushion of positions.
Right.
It slows the sell pressure. It has to sell through deep liquidity to move the price down further. So we act as a cushion where this kind of gets caught into this higher friction zone. And then let's say the popularity keeps going though. Like Wolf, this is exactly what happened. It broke out, it came back down, then it broke out again, and it's just been running free and clear now of all the deep liquidity, and it is allowing it to do these crazy moves. So we're effectively creating like a ratcheting system that helps these tokens that are pumping and gives them downside protection, and then we snuggle up again, and boom, it'll come back into this region. It might keep going up. We'll just eventually keep moving our deep liquidity up, and it helps support and push these tokens. It helps them leg up on a popular token that's trending and catching momentum. We really help reinforce and
so should people be telling their community, if you're in the Wolf community, you should be telling them to come and use Maxfi to provide liquidity. That is important because you're going to only help the token. The way the system works, like he does, like Alex just explained, it is a cushion. You want to create this cushion, especially for meme coins. I feel it's the most important thing because meme coins have this tendency of crashing and burning, and then they're dead. So if you could stop that from happening, the deep liquidity that Maxfi and SnuggleFi create stops this from happening. If you're in any of these meme coin communities, talk to the meme coin heads, the leaders, CEOs, tell them to contact us, put out a tweet, tell them to start using Maxfi because this only helps them. Educate them. You guys got to educate these people, and hell, use your referral code. You know, if they decide to do it, at least you make a little bit of money too, you know? So I think that's important for our own community, which is now quite sizable, to go out and start educating people and telling people, do this to your meme coins because this is only going to provide basically a kind of a boost to your meme, or I would say stability more, not a boost, but more of like a stability to your meme coin.
Yeah, it helps potentiate growth and stability in the market for this coin. It needs liquidity, and if the liquidity is positioned correctly and works in a timed fashion where as it moves up to the next leg, certain amount of time goes by, it looks like that's the new trading zone. Boom, we snuggle up to it, and if it comes back down into our range, we're all earning, we're all happy, and so are they. And now they've got some more support. And then it breaks out again, and it's running free and clear in lower liquidity zones. And then boom, we move the ranges up to the next leg to protect it from on the downside, and then we earn fees every time it comes back down. Now, it's really kind of a crazy effect. I don't know if these meme coin token creators or communities are even aware that this is happening.
They're not aware,
but it's happening, and it was unintentional. I did not. This is an unintended consequence of the technology I created and the community we've grown to become. And
Well,
it just we have a lot of power here, and we got to use it responsibly, obviously.
yeah. Well, I think
Yeah.
this is I think what this is, it just shows first, this is the power of the technology, like you said. But I think more than anything, not only is the power of the technology, it's the stuff we don't even know what this technology can do. Like in the Discord, Alex, also the other Alex, said that Maxfi is the future of finance, and other people are saying we're bringing DeFi back. We don't know the power of the system yet. And one of the things that you've done is brought bonds. You brought ESGOV over to DeFi. Can you explain to us how powerful this is? I did a video today describing how you can put it in stable pairs and stuff like that. You can go back one video, guys, and watch that where I explained it a little bit. But is there anything, I think you watched the video, is there anything I was missing in that video or something else that you'd like to add about how powerful it is to have something like these bonds now trading on LPs?
It's incredibly powerful. All right, so ESGOV are short-term. It's a ETF of short-term treasuries, treasury bonds, T-bills, 0 to 3 month expiries.
Let me point something out. They're not going to get 190%. You did it because you were early, and you got, and some other people got those big percentages. You're probably looking between 20 and 40%, and we don't really know the real rates right now anyway. It's just too soon. It could be 190%. But if you do end up earning anything over 50% on this, consider yourself to be insanely lucky, and you should just put everything in it. But go ahead.
So ESGOV is essentially it's essentially a stable coin in the bond market. Like, it hovers around $100 pretty consistently. It barely fluctuates. I mean, you can look at like you can look at the price chart, just Google it. It's just got the sawtooth pattern. Right. Every time it pays out the dividend every month, it drops back into its little, it's got just this little zone of movement. It's the perfect chart for a liquidity provider. We love oscillating patterns. We just kind of set our positions in there and just like, we can concentrate it even a little bit and snuggle up and down with it. Very, very little impermanent loss, kind of like we do on some of the Forex pairs like EURC/USDC, where you can concentrate your liquidity, get 10, 20% effectively. And after like the tiny amount of impermanent loss, you're getting like 15, 16% over the course of a year on that EURC USDC pool, if not more. There's very little impermanent loss with Snuggle Rebalancing on it. Now with ESGOV, this is essentially, in my opinion, a stablecoin pair where your downside is the price of ESGOV, which doesn't move. It's like $100. It's like $100.60, 70 cents, something like that.
Correct.
And USDG is a stable coin. It also is pegged to $1. So this is a very stable pair with very low volatility. And you can concentrate your liquidity on this with Snuggle Rebalancing tech to get extra yield out of it, and then minimize any impermanent loss even on something like this. Or you can just go wider and just capture that whole movement like I am here. Now, like he said, I had a first mover advantage with this position I set up because I announced it in the community. I created the position. I had set up all the infrastructure on chain for this to even work. We're the only venue on Uniswap that provides ESGOV. So if somebody wants to buy or sell ESGOV, there's a very good chance that they're going through us. And what that means is they're going to pay 0.3% to us every time they buy or sell ESGOV. And the reason why we see very high returns right now is because this is a new market. It's an inefficient market. And as market makers, that's where we can make the most money. We fill in the gaps in the market. We provide the service necessary to facilitate the trading of these assets. ESGOV, very popular. It's like in my opinion, it's like the most popular stock or ETF ever, because people use it like a money market fund. Yeah. And most money market funds just park their money in ESGOV and then pass the yield on to you for 3.5%, 4% a year.
3.5%, 4% a year. And you still do get that 3.5%, 4% even in your liquidity pool. So on top of earning, this is what's crazy, whatever ESGOV tokens you have during the drop, I believe at the end of the month, you'll have like 50-50 or whatever it is, maybe 60-40 or 70-30. You'll get that portion in ESGOV. So you're still earning while you're earning a yield, which is kind of crazy. We're earning a double yield.
We're earning a double yield. And this is what I would call our first official ratchet pool, where the value of the position just ratchets up over time, like a floor, like a self-increasing floor. It just ratchets up. It does double duty, like you said. First, we earn the swap fees as the market makers. Second, we earn the dividend as value accrual in the ESGOV tokens in our liquidity position. So this is a ratchet pool doing double duty that moonlights as a market maker during the day in a self-accruing position at night. And it's incredible. I mean, the way Robinhood developed their dividend structure on these assets is brilliant. They don't pay the dividend to your wallet. They take the dividend and they roll it into the value of the token itself. So every month, the value of your ESGOV might go up 0.1% or something, or 0.3%, like a very small amount, 4.5% annualized APR on the dividend. It's between 3.5 to 4.5%, depending on what the Federal Reserve, says at the time. But that dividend rolls into the token, and this token is composable. What that means in blockchain terms is you could take this token and you could go do other things with it in smart contracts, like liquidity pools. Liquidity pools are smart contracts at the end of the day on the blockchain. So you have this smart contract with ESGOV in it. ESGOV is a self-appreciating dividend stock that just gains value, and now you can take it and earn double yield on it. And in the future, and people are already building these things, you'll be able to lend it out as collateral or do other cool things with it that we haven't even thought of yet.
Well, that's the thing. We haven't thought of a lot of this stuff, and we don't know the full power of this technology. And it's only been 5-6 months since Maxfi and SnuggleFi have been on the market. So what I would suggest to everyone is come on the site, start an LP with $500 or $1,000, throw a few $1,000s at it, learn it now, understand it, because we don't know the full potential. We just discovered this. We discovered the stocks. We discovered that we are the only system that can really trade in these pools because of the 0.3% and the 1% pools. You can't LP these through yourself or normal rebalancing. You will get massacred by the fees. I had 3-4 rebalances on my Apple stock for the other day. I mean, I would have lost like 2% right there. Imagine if you had $100,000 in there, I would have lost $2,000.
Yeah.
When you start to think about it, you wouldn't have made any money, and that's why people are scared to LP sometimes. You fixed that problem.
It was a problem I was facing as a liquidity provider for years, and I was teaching liquidity provisioning for years, and I was helping people manually overcome these inefficiencies and coming up with clever tricks, and the pro investor groups like the Underdog Investor Group, where I've taught for years. We taught one of these clever tricks called Snuggle Rebalancing. We've taught that for years. It's the most efficient way to rebalance a concentrated liquidity position. But to do it manually, it takes a lot of decisiveness. It takes a lot of focus, effort, concentration. You have to pull the trigger on it. And also, you have to click the buttons. You have to do it manually. And if you're managing more than 3 positions, it's going to take you like probably 10 hours a week just to manage those 3 positions. You go out of range, you hem and haw, you stare at the chart, you look up the news. Should I rebalance? Shouldn't I rebalance? We have rules that we would put in place. Like, I'm going to wait 24, 48, or 72 hours after I've gone out of range before I decide to do a snuggle rebalance. And I'm like, I'm doing the same exact algorithm every single week. I'm teaching these people the same exact process. It's repeatable. I've done it 10,000 times now. and so have hundreds of my clients. What can I do to get my time back? I'm spending 10 or 20 hours a week. It's like a part-time job. And if you have more than a couple positions, it's a full-time job managing liquidity positions. But now look at this. I've got 68 positions.
No problem.
No problem. And it is hands off. I don't do anything. I do nothing.
And you got stocks, you got memes, you got coins, got everything all mixed together.
I got everything. I got altcoins. I got, virtual wrapped ETH in here. I love that one. Got tons of stocks. The meme coins, it's a casino. It is so much fun for me. Like, I have my blue chip stuff. I parked a large amount of capital in those. But then I go to the meme coin casino.
This is a casino.
I throw a couple $100 in with like a super wide range, and I see what happens. And some of these are just absolute bangers.
Well, Alex, we got to get going here. I appreciate you. A lot of great information for everyone. Yeah. And, we want to thank the community. You guys are awesome. You guys are doing great. And it's just great to see how many people now understand how powerful the system is. And there's so many people who are using the system in innovative ways. And I'm sure there's going to be more innovations coming.
So yeah, and share your positions in the Discord community. I'm gathering data points on these are all my test positions to gather data points to feed into Agent Max to build out our back testers so we can find the optimal settings for range width and rebalance delay on a given pool, like we've done on the Agent Max picks over on Base Chain. So share what's working for you, share what's not working for you, post your screenshots in the Top Plays channel, and that information really helps us dial in some of these settings as a community so we can really optimize our performance and win bigger as a community.
And make sure to tell those meme coin people that are running those meme coins to reach out to Maxfi, or at least retweet and get their community on board to start using the system, because that's going to be very important for these meme tokens. It's going to provide that cushion for them where they can have a nice cushion and slowly leg up. So, we're changing things out here. We're trying to do things a little differently. But anyway, guys, thank you all.
Thank you.